Welcome to Moneywize with Brian. My name is Brian Alexander. The 11 keys for sensible investors. Yes, the 11 keys for sensible investors. Now, we all know the situations faced for all investors around the world at this point with COVID-19 and its turmoil. Therefore, the times more than ever is calling for wise and prudent investing. Most people are concerned about the current business and financial environment. Yes, we are concerned. That's absolutely no doubt about it. So there are 3 key things not to do as a sensible investor. So before I get to the 11 in a moment, let's mention the 3 key things that we should not do as a sensible investor. The first thing is that we should not be emotional and erratic about our financial and business decisions. Not being emotional and erratic. Don't just make decisions off the cuff, or someone has said something or you think that maybe we should do something quickly, and that's a serious mistake. Number 2, as well, we should not be looking for that quick fix. So many people, you see it marketed throughout the internet, on YouTube videos, on Facebook, LinkedIn, many places, the quick fix. As in the next best investment over the 3, 6 or 12 months, and you're going to make anything from 50% to 500% returns. And that's what's promised. And who knows whether that you'll get it, but that's not really how you want to invest with a who knows. Number 3, we should be careful when listening to the all eggs in this basket. Now, no one's saying all eggs in this basket, but they were saying you need to invest in X. That's where the in thing is. That's where you're going to make your money. And all your eggs need to be in this basket mentality. Be careful of all your eggs in just one basket. So those are the 3 things. What are the 11 keys actually then for a sensible investor? What are the 11 keys for a sensible investor? Number 1, stick to sensible, tried and tested investments. There are investments that have been going for decades and they will return you a consistent return on a long-term basis, and that's what wealth creation is all about. Investing for the medium to long term to create wealth. Number 2, consider value and dividend stocks. Consider value and dividend stocks. Bring some of that into your portfolio. Number 3, as well, consider a portion of fixed notes or fixed deposits where it's 3, 4, 5 year period where you get a set return on your investment. And have that as a portion of your portfolio. I'm not saying how much of that portion in any one of these departments, because it's in any person's life. It is, remember, it is a bespoke situation you find yourself in, so it needs to be a bespoke solution. Number 4, stick to your strategies and goals. So what is your strategy and what is your goal? Have you made it clear to yourself? Have you written it down? Have you made it clear to your financial planner, your wealth manager? Stick to your strategies and goals. Number 5, add dollar cost averaging. If you're from South Africa, it's rand cost averaging or sterling cost averaging or euro cost averaging, whatever you want to call it, but cost averaging. In other words, you're contributing on a regular basis. You're not trying to time the market, so when the market does dip, you've bought at its lowest, and you'll find that you're going to create value that way. So if you have a lump sum contributed, it'll be good to add a cost averaging into your investing. Number 6, of course, hold a sensible emergency fund. Hold a sensible emergency fund. We all know what an emergency fund is for. Yes, you're correct. It's an emergency. Number 7, then as well, keep the correct balance of diversification in your portfolio. Look and consider diversification across the continent. Keep your investment portfolio well diversified. Like I said earlier, not all your eggs in one basket. Number 8, keep cost low in relation to your returns. So balance out your cost against your returns. I'm not saying pay higher costs, but there are times when we buy things a little bit more expensive because we know our return is going to be greater. So carefully look at cost against the relation of your returns. Number 9, have a clear long-term goal. Have a very clear long-term goal. Whether that term is 5 or 10 or 15 years, have a very clear long-term goal. Number 10, let compound interest do its work. So stay invested, make your plan, stay invested, and let compound interest really accelerate your investment. And lastly, review. I review my clients every 3 months. I review their portfolios to make sure that we are achieving what they are set out to achieve. And if needed, it can then be adjusted and not get a surprise at the end of the investment and find out that it didn't achieve. So review, review, review is the final point. So have you got all 11 keys for working in your portfolio? Have you got all 11 keys? If you would like all 11 keys to be working effectively, then why not be in contact with myself? And we can set a time to chat. Click on the link below, complete the form, click on the link, complete the form, and make your perfect wealth plan today. Subscribe. You'll see the subscribe down below for more free videos. And see you soon on the path to wealth creation.